heading into the year end here,
Mm,
let's turn our attention to the U.S. markets.
mm,
Where we were at in April, what we hit last month, the recent volatility that we've
mm.
had. There's always news, a decent earnings season. Just looking, I mean, nice gains here.
Yeah.
Do you think money managers are just kind of like, well, they're buying the dip because we've had some
Mm.
violent dips here over the last couple of weeks, but they're kind of also like selling the rip here. Just put a bow on the year, maybe where your targets were for the S&P 500 and your sentiment for 2026.
Well, in April, I actually thought that we'd seen the highs for the year in the S&P, so I got that wrong. But on the other hand, I was very bullish on the FTSE 100 here in the UK. I didn't think we get to 10,000. I thought we get to 9.5. So again, a very good year for both US stocks, UK stocks. Can we sustain that into 2026? I don't see why not. But between now and January, I don't think there's going to be an awful lot of upside. Now, why do I say that? Because if you've made your money this year, you're going to want to bank it. You're going to want to make sure that come year end, you've got a positive P&L. So given the gains that we've seen thus far this year, I think that's why you're seeing the volatility, guys. I think people are worried about hanging on to what they've got, and they're going to be reluctant to push markets significantly higher from here. So potentially, I think we've probably seen the highs for the year, but 2026, as long as we get a rate cut in December or January or whenever, further rate cuts, then I see no reason why stocks can't continue to go higher, barring obviously an unexpected event.